Bill, welcome.
Thank you, Michael.
Yeah.
Yeah, what are we going to talk about tonight?
We'll just go through some questions.
Yeah.
And we'll chat a little bit.
Cool.
So again, for those of you that have not been here, this is truly a fireside chat. It's really just two people talking. We're going to go through questions, and some of these questions actually people have sent me. Others will go on the fly and make them up. And about the last 15, 20 minutes, we'll open up for Q&A for you guys. So feel free to ask questions. You can also tweet the hashtag as well. I'll get questions like that as well. So feel free to do that. But so the last 15, 20 minutes, we'll do that. So hold the questions till the end, and we'll go through this and be out of here by a little after 8 o'clock.
Sounds good.
Okay. So first of all, why do you do what you do? Like, why you're so...
This is like an existential question right off the bat.
First, yeah. I guess everyone doesn't know that you do, but so you're a venture capitalist.
Yeah.
So tell us why you do that, and if you can, tell us real quickly just a bit about DFJ.
Sure, yeah, so the venture capital is the sort of last chapter for me of being an entrepreneur for 18 plus years consecutively doing startups in the Seattle community. My first startup was in '88. I've been involved with over 25 different companies now as a founder, as a angel investor, board member, advisor, and now venture capitalist. So this is a kind of culminating chapter to all of that. And why I do it is that it's sort of what I do. I wasn't creative as a kid, and I don't have any artistic talent, but I view the formation of a company as a form of art.
Absolutely.
And I just love doing it. I love being inspired by entrepreneurs who are bringing these amazing ideas to fruition and galvanizing teams around those opportunities and try to be helpful along the way. So that's, I get the energy from the entrepreneurs that I work with.
That's great. And so tell us just a couple sentences. DFJ.
Oh, yeah.
And most people know what DFJ is.
Yeah, DFJ is a 30-year Tier 1 venture fund based out of Silicon Valley. We've organized just about $7 billion now in investment assets over that time frame. We're just about to announce a new fund that in a couple of weeks. That'll be our 12th fund. We've backed 400-ish portfolio companies over that long arc. Many that you know: Baidu, Skype, Tesla, SpaceX, Box. So pretty iconic companies out of that mix. It's a fourth generation venture fund in the sense that the great grandfather of Tim Draper started in the venture business. So we're carrying on that legacy. I'm one of 6 investing partners in the fund, and my mandate is to try to find the next SpaceX,
sure,
hopefully here in Seattle.
Yeah. So why do they go from Draper Fisher Jurvetson to DFJ? What is that?
Well, it was just part of the evolution of the brand. I mean, one of the real challenges with venture funds is generational succession. You see very few funds that have succeeded in carrying on over multiple generations. Many funds, Accel would be one, Kleiner Perkins is another, Sequoia another, but very few funds make it from generation to generation. And so in our journey, we just thought that it would be better to kind of lose the names on the door, so to speak, and go to this DFJ branding. So Tim is an active supporter of the fund, but he's not an investor any longer. And John Fisher's doing our growth stage investing. We have a sister fund that does the later stage investing. So the J is still around, Steve Jurvetson, but that's it.
Yeah, that's right.
Yeah.
So tell us, the audience, you're looking for big ideas.
We are.
What are some clues of a big idea? Because I'm sure some people in the room like, oh, I've got a big idea. Right?
Yeah.
I mean, I've been there. I mean, like, I thought I had, a big idea, which turned out to be a fairly small idea. But what's the characteristics of that?
Yeah, and certainly a lot of big ideas don't present themselves that way when they are nascent and just getting incarnated. But yeah, that's after 30 years in investing, we've figured out that like in many industries, there's a power law that works in venture capital, and out of the 400 companies, maybe 10, 15 of them have generated 80, 90% of the gains. All the rest are just noise. We make some money, we lose some money, but really it's just those few companies that drive returns. And so, at the end of the day, we're money managers. That's what we are. We sell money to entrepreneurs, we raise money from endowments and trust funds and wealthy individuals, and we're trying to place it as in companies to generate financial returns. And the best way to do that is to invest in a SpaceX. So we're trying to we're very much still trying to chase outlier events, trying to find these mission-driven, purposeful entrepreneurs who are bringing highly disruptive technologies against large-scale businesses in an attempt to build a $billion-plus proposition, because that's the only way we know how to make money. There are other ways. We just it's just our model has evolved so we're known with our LPs for delivering every now and again a really big outsized return. So we swing for the fences. We're comfortable taking large risks to do that, because they're not, as I said, these young companies, they don't look like
you don't know
big ideas right from the start. So generally they're addressing very, very large markets. That's number one. Can't be a big company addressing a small market. And they have mission-driven entrepreneurs who are out to change the world. I was chatting with I think your partner, but talking about the what we look for in an entrepreneur. And for me, I look very deeply at the motivational factors, because from my own experience, I know that startups are a long, long journey. They're a 7 to 10 year process in a success outcome, and there are lots of dark days and days that you wonder why you're doing this. And if you're not just obsessed with the problem you're trying to address, it doesn't work.
You'll stop.
Yeah.
And what is a time where you met an individual and said, this guy is totally it, and you were wrong?
Wrong. Oh, we can't. We got to. That's a witness protection program, right? I mean, we can't out people like that. But
tell us the
there are
story.
lots of people that
Tell us the story that you, without
told me
naming names, right? You could say that. It was an interesting meetup or a meeting, and
I mean, I'd prefer not to trash. I mean, every entrepreneur, there's some redeeming qualities to what they're all about. But I mean, you talked about. I think you mentioned in the warm up here that. Glenn Kelman had come through, right?
Sure, yeah.
And, you meet Glenn and you go, wow, this guy, there's meaning to his life. He really wants to transform the way we transact for the largest, purchase of our lives. And that's, if he makes no money in the process, that's okay with him, okay? Yep. He wants to make that happen. So, we're famous for backing Elon Musk's deals. And so Elon's the same way. It's like, I want to put a man on Mars. I want to populate, terraform Mars.
Sure.
And I don't care if I make any money in the process, but this is important to the survival of the human race, and he deeply believes that, right?
Yeah.
So, it's
having that conviction is the key there, where you just don't give a crap what people think, or like you say, whether they make money or not. That's not the critical piece. It's this is what I'm doing, and I'll figure out the other stuff as I go. My
most recent investment here in Seattle is a company called Remitly. It's led by a young entrepreneur, Matt Oppenheimer, who's a remarkable young man. Yeah. He's actually going to be here in June. Oh, good. Yeah, you're going to love him. He's fantastic. If I could work with 100 Matts, life would be great. But he spent 4 years in Kenya working for Barclays, and he watched the challenges that Kenyans had to receive money from loved ones back. I'm sorry. He watched how the difficulties that Kenyans had to receive money from their loved ones who were working abroad, and he said, I'm going to fix that. And came back to Seattle, joined Techstars, started a team, and he's out to change the world. He's definitely. Yeah, he's totally nailing it too. Yeah. So give us just a bit of background. So you've been here in Seattle for most of your adult life. Yeah. Up from Bellingham or down from Bellingham. Why do you stay in Seattle? Well, my wife's a fourth generation Seattleite.
Oh,
How's
okay.
that? Yeah.
I guess
And
that's
we
easy.
were down in the Bay Area. I was doing a startup down there, my very first one actually, tech startup, and we were there from '88 to '91, and we had our first child. And my wife said, you know, look, I'm taking our daughter back to Seattle, and if you want to watch her grow up, I would
come with me.
advise you to
You should come with me.
figure out how to make a living in Seattle.
Yeah,
So
yeah.
it was good advice, and you know, I'm glad to have been here and been a participant here. And you know, and as we all know, I mean, Seattle's been, you know, it's not the Bay Area. Bay Area is Mecca, and there's only one Mecca, but you know, it's a fantastic place to be an entrepreneur and be a participant in the community, and you know, wouldn't have traded that
Yeah.
for anything.
And you know, we talk about it a lot, and I'm sure most of the people in this audience have heard about, you know, the difference between the San Francisco and Seattle, et cetera, blah, blah, blah.
Yeah.
What is, from a VC standpoint, I mean, that's put your business hat on. From a VC standpoint, what is the difference between Seattle and the Bay Area? For at least the major difference for Bill.
Well, so I have the advantage of, you know, I sit in our partner meetings and see a lot of our deal flow from the Bay Area. And, you know, a couple of things do strike me as being different. I mean, Seattle entrepreneurs, and this is not trying to be pejorative, but they are not typically as ambitious as a Bay Area entrepreneur. The Bay Area entrepreneur just, they want to dominate and crush whatever segment they're not nice people, really, you know, so. So that's different. It's just cultural. You know, in Seattle, we're nice. You know, we don't. It's, you know, the whole thing about the tallest trees getting chopped down and things like that. So we don't tend to be chest thumpers.
Yeah.
You know, and very much, you know, it's different in the Bay Area, but they do tend to have a bit more of a sense of urgency about it. They see how every high quality idea gets quickly knocked off in the Bay Area, so they have this urgency to get things done that, you know, maybe we don't have quite that same mentality here.
And is that, you know, again, now coming from an entrepreneur standpoint, which you were for many years, the difference between here and there, what is that difference for you if you're wearing the entrepreneur hat?
Well, I think here in Seattle, you're in a position to actually build long-term companies that maybe aren't rocket ships from day one, but they take time to grow because you have that loyalty factor from employees. It's not in the Bay Area. It's brutal competition. You've got Uber sitting next to Square, sitting next to Twitter, right? I mean, so depending on the stock price or perceived stock price of the day, you've got, you know, people just walking across the street finding new job, right? So, and you don't have that proliferation of startups here, and I think people will stick with companies a little bit longer. Qpass is a great case in point, a company that I was fortunate enough to be one of the co-founders of, and you know, ultimately we had a very successful outcome, but it took 9 years, and we went from a you know, heavily funded VC startup with an S1 underwritten by, you know, Goldman Sachs to being very humbled in the .com era, went from 350 people down to 50 and rebuilt a proposition to, you know, that got a fantastic exit. And I think one of the things that we're proudest of is that of the I think it was 35 of the first 50 employees we had were there at the end.
Wow.
After a kind of up and down and up, back up again. Yeah.
So that says a lot, just again about the loyalty of the Seattle employee, right?
Yeah.
Yeah. And so talk to me about your experience as an entrepreneur, because what's interesting about you is you know, you've done both, and you've done both for a big chunk of time. It's not like you've just been a VC for a couple of years. So you know, coming from the entrepreneur hat, as most of us are in this room, what things can we do as entrepreneurs to develop the network of people like a Bill Bryant, like a Greg Gottson or Jeff Interest or any of those guys, what can we do to build that network? What would you advise people to do? Because it is, if you can walk in the room with those people, it's a very different process versus how do I get to meet that guy, right? So how do you build that network? What's your advice on that?
You mean as a first time just getting started?
Yeah, I mean there's people that are first time company and they're starting it, so you've got to start the process of meeting people because it is partly who you know.
Yeah.
So what would you tell them?
I'd say go get on LinkedIn with Michael, and there are lots of connectors out here. I mean, I saw Adam out there, and there are people who have been involved with the startup community for a long time, and it's generally the case that VCs really we say yes, we'll read every plan that comes over the transom. DFJ got something like 14,000 business plans last year, right?
It's crazy.
So it is a crazy number, and we actually just did an analysis. We didn't even bring one of them in. That was over the transom, right? Into for a meeting. So if you're not a high enough, if you don't know how to network and get to people who know the right people, you're probably not going to be a very successful entrepreneur who's able to get that first customer, right? Yeah. So there's so many, people out here even in this audience that know the venture community and get to know them.
Yeah. I mean it's super critical.
Yeah, we have to use filters, and one of the filters is, can this person figure out how to connect with people that say, I'm going to put my reputation on the line. I know enough about what you're trying to accomplish as an investor, and I think you should meet with this entrepreneur.
Yeah.
You're not going to waste my time.
Yeah, and that's obviously your one of your jobs is to build that network of people that will send Bill the right one, not the crappy one.
There you go. Yeah.
So the along those same lines, that mentorship, that is important to have a mentor and
very much so.
Facilitate that. How much of that do you do? You're probably obviously a mentor for maybe several folks, but why do you do that?
I'm a mentor right now for Techstars, for 9 Mile Labs, for the Microsoft Accelerator. So, I do spend time with young companies, knowing that we're unlikely. We're not seed investors, I should say that now. 10 years ago, DFJ would have been considered a seed investor. Today, there's so many micro VCs, seed funds, super angels, accelerators, peer funding platforms, crowdfunding platforms. We just said, we're not equipped. When we invest hundreds of thousands of dollars, we just can't spend the time with the company as we can when we're investing millions. So I do that not because I think any of these companies are going to be ripe for us to invest in immediately, but Remitly was a Techstars company in 2012. Yeah. 2 years later, they're at a stage where it makes sense for us to be involved. So it's building some long-term relationships and just keeping tabs. Definitely mentorship is important. You mentioned Scott Oakey, coming up. Scott was my personal mentor. He's why I
really
absolutely say hello to him.
Oh, that is interesting.
Yeah, without Scott, I wouldn't be sitting up here beside you.
That's great. Yeah. That is very good to know. Yeah. And I think one thing that I would just add to that is, I think one of the things we do, especially when we're younger, because we're really smart and we know everything. At least I was when I was 23. Holy crap. Is we don't value that as much when we're younger. The value of someone older that maybe it's just a sounding board, right?
Yeah.
And the value of that is just, it's huge as you go up the food chain in your life. Having quality people like a Scott Oakey around you. Like you say, you wouldn't be sitting here with a guy like that. That's saying a lot. I mean, that's a big statement, right? So I just think one of the things that we do as individuals and entrepreneurs is we don't value that enough, especially early on in our careers. So I would say, if you're not doing it, find someone and do it. Get a mentor and find someone you really like and will really give you honest, quality feedback.
Yeah, some of the best entrepreneurs have had the pleasure of working with from a very early on standpoint built a true board of advisors separate from their board to give them this unfiltered feedback, and it's been hugely important to their success.
Yeah. So talking about boards, you're on what, 5, 6, 7 boards?
5 boards right now, right? Yeah.
Is that too many?
No. Full load is kind of up to 8.
Yeah.
8, and it depends on stage. Early stage takes a lot more. Later stage tends to also take a lot of time but for a small amount of time when you're trying to figure out exit. But you're trying to balance that off with a couple startups, a couple mid-stage, a couple later stage. So no, 5's not too many.
You can handle that. And is that the general rule? 8? Is that kind of just a general?
8's kind of a general rule. Yeah. Above 8, you're feeling pretty taxed. 6 is very comfortable.
Sure.
It's nice.
Yeah, you can still carry on a normal life.
Yeah.
What's a normal day for Bill Bryant? What's like a normal day?
Yeah.
I mean, we visited the coffee shop once.
Yeah.
I mean, like, what's a normal day for you?
Oh, I will take 2 or 3 meetings a day. Just people some
meetings?
Coffee meetings. Yeah, just checking in. I touch base with each of the companies at least once a week. I'll touch base with the CEO and just find out where we can be helpful. A lot of times it's with introductions, customer relationship building, teams, or the companies will be looking for a CFO or VP engineering, and we're involved with those processes.
Sure.
And just a ton of email and plans, and in a partnership, we're all participating in the diligence of the deals that the other partners are working on. So as the deals progress, we'll have to come up to speed and form an opinion on that opportunity.
Yeah.
So.
But
I can tell you, I don't work nearly as hard as I did as an entrepreneur.
Well, sure.
Yeah, it's a balanced lifestyle, and have control over your schedule.
And did you choose to be a VC? Like, did you say, "Hey, I want to do that," or did somebody ask you? Like,
Yeah,
hey,
no, I had a relationship with DFJ that dated back to the late 90s. I was an independent board member of a DFJ portfolio company. I got to know a couple of the partners there, and throughout the 2000 timeframe, they wanted to build stronger connectivity here into the startup community. They realized that Seattle was one of the important markets, and they didn't really have a way to get into the quality deal flow.
Sure.
So they had asked if I was interested in involvement. It wasn't interesting at that time, and finally in 2007, I kind of come off the last startup. I really didn't have. I was a little burned out. And didn't have another burning idea and a team that I wanted to do it with. So I said, let's try this out. But I did not think, honestly, at that time that I would become a full-time VC. I thought,
I'll try it for a while.
Try for a while, but I'm going to do another startup. I was convinced of that just things happened, and here I am 9 years later, and now I am a full-time VC.
Yeah.
So. Yeah.
And what do you think is what's been tough for you? Because obviously you're an entrepreneur, and that's what you did for your basically whole career.
Yeah.
What was it hard? What was the hard part about kind of turning the tables, I guess, as you call it? You're coming from a
well, yeah. So look, I mean, being a venture capitalist is fantastic, work if you can get it. So, but there is nothing like being part of a startup that has this shared sense of mission and purpose, and a core group of people that you're working with, and you feel like you're really accomplishing something. And there's just nothing like that. And then we don't have that in the venture. It's not a company per se. We're a bunch of individuals. We come together, we make decisions, we go off and manage the companies. But we don't have this sort of. It's not like a sense of a shared, high-level purpose in life that you get with a startup. So, I envy that, but I have to live it vicariously now.
Yeah. It's not a bad thing to do, right?
Yeah.
Like you say, if you can get the work. And share your concept of what's the perfect, and there is no perfect team, but what's to you is a good team to start a company around? Like, what do you think, in your opinion, what do the founders need to be like? What's the relationship? I mean, do they need to be longtime friends? I mean, there's certain things that people have said that, hey, they really care about in a team. What are the things that Bill cares about in a team when you're looking, evaluating a team?
Yeah, well, having worked together is really important. You'd be surprised how many blow-ups there are in startup teams, and it's beyond. I mean, there's some other reasons why companies fail, but founder dissolution and dissent and tension is right up there. And so we do look for teams that have worked together, typically in another company, and they've come back together. I enjoyed working with Michael. Hey, let's go do a startup together. So we definitely look for that. We're looking for high IQ, smarts factor, domain expertise, relevant, balanced background. So you want to have that technical founder. You want to have a product guy. You want to have sales and marketing, go-to-market kind of person. And you want to have a leader. The CEO, kind of that charismatic, inspirational, vision type person who can bring a team together and get them focused around a set of priorities. That's a rare skill set, for sure. So we spend a lot of time. I don't think we don't do a deal where we feel queasy about the CEO.
You don't.
We do not. No. We just. It's too painful. You can have that conversation. You say, "Hey, are you like CEO for life, or are and you're okay if we move on?" But and everyone will say yes, whatever the business needs and all of that. But as it turns out, there's a lot of emotion and personal ego issues and lots of things that go along with that. So it's pretty So we make mistakes, but we don't go into a deal saying, we're going to take this guy out, day 30. I mean,
exactly.
That doesn't work.
So I guess this would be a tweetable moment. Make sure you have a leader on your team.
Yeah.
Right. That's the key. At least one of the keys.
It's just that the leadership component is just so critical. I mean, it's just the ability to bring this team together, go sell to partners and investors and first customers, and be able to share why is this team focused on this problem, sharing that out with a set of other people that's a critical skill set. It's not sales, it's really getting people excited about the mission of the company.
Yeah. And one of the things I think that we overlook as entrepreneurs is we get buried in the love of the idea, and we sometimes forget that you do have to have a leader, and it may not always come from the CEO, but you need to have someone on your team can stand up and say, let's do that, let's go that direction, and these are the reasons why, and is everyone behind me, kind of thing. I think we just sometimes forget that that's a critical piece to have on a team. You may have really 4 good friends and think, we don't need that. But you do need somebody that can, at the end of the day, just say, hey, let's do it that way, right?
Yeah.
And I think we as entrepreneurs get clouded because we get so excited about the idea that we forget that that's a key component of building a company. And your experiences of the several companies that you've been involved with in a startup environment. What were the things that you think that were keys to you guys being successful? I mean, give us a couple that again, Qpass or namely the several that you were with, but what do you think was like, these were a couple things that, we had to have that we were lucky because we had this thing, or? Yeah,
well, luck is a big part of it, but sure. But focus and priority is right up there. I mean, young companies are by definition resource constrained, and spreading yourself across too many fronts, fighting that 2-front war, 3-front war just does not work. So I'd say be able to prioritize what you absolutely must accomplish to get to that next step. So
and What was the company that you had the most struggles? Like, what was the one that you were like, we just worked our asses off to get that far, and it was a struggle every step of the way, but we did it. Give us.
Well, that would be Qpass. That was, and that's a company that we, we did get defocused in the sense that we started out with this. The basic idea behind Qpass was to enable one-click purchasing across the internet. Make that so we, here Amazon shows up 96 year, and they have this thing called one-click purchasing. It's really a cool user experience. Everyone loves it, right? So we said, wouldn't that be awesome if people had a single identity, a single credential, a single payment mechanism on the back end, could go into any arbitrary website and be able to transact.
Sure.
And that's where we started, and we raised a lot of money against that objective, but we lost sight of that objective because we got too ambitious. We said, hey, let's not only do it on the web, but let's do it on mobile phones. Let's do it on interactive TV. So we were out pursuing deals with, the whatever Cable One and AT&T and people that we just.
Yeah, it's so early on too, right?
Yeah, it was totally early on where PayPal. We were competitors with PayPal at the time. And PayPal, speaking of focus, so we wanted to be internet-wide. They started with one community, the eBay community, okay, and broadened out. They won the eBay and then broadened out, right? So
you guys hadn't won anything yet.
Yeah, we had not.
Yeah. So if you're going to give advice to an entrepreneur, what would you rephrase that? What would you just say there? You just what would be the learning that you got? If you're going to communicate that to someone.
Well, yeah, it is about that high sense of focus and priority. It's just just knowing that I think too many companies are trying to they're thinking about the thing they're going to do in 12 and 18 and 24 and 36 months and having that long term, and that's it's essential. It is, but not to distract the company from what you need to do in the next 6 months.
Yeah.
Just to make progress and show investors that you're actually making progress against this 3 or 4 year
just grind
vision.
It out, right? Just
grind it out. Yeah.
Just
So I mean, it's I always had a saying that the next 90 days is wherever you are in a company's progression. The next 90 days is always the most essential, no matter where you're at. Yeah. And so it's just keeping a focus on that next few months of activity and making sure that you've got the resources and the plans and the people and strategy to make that.
And I think
successful.
One of the things that I think it's much more talked about today than it was when you're in Qpass days is that like PayPal did. They focused on a thing, eBay.
Yeah.
Killed it. Right, and just they were the guys. Mm-hmm. And then they went off to the next thing where we talk about that a lot, even in Lean, is focus on a thing, whether it be Seattle or whatever, and then try to go to other things, but just nail one thing really well, so then you can say, okay, I got this figured out. Now let's go to the next one.
Yeah.
Probably
PayPal probably had. They had the same vision that we did. They just took a different tactic and
path.
Yeah, a different path.
Yeah. And in the process of starting a company, what do you think is one of the bigger failures that's happening today? With again, you're talking to people all the time, every day, all day. Mm-hmm. What do you think are some common mistakes that you would say, this happens quite often? What do you think it is, or a couple things?
I think we're still inventing new mistakes. I'm not sure there's one,
Inventing new mistakes.
Yeah.
Okay.
New mistakes to be made, but I would counsel entrepreneurs, and it's not to we talk about lifestyle startups, and it's not suggesting that everyone should go down the venture capital route or whatever, but I would say that startups are inherently hard. They're difficult, and they're difficult for a reason. And they're difficult whether you have a small scale objective in mind or a big one. It's
hard either way.
It's hard either way.
Yeah.
So I would say, go for the big one, because you can you can get people who are inspired by that idea, and you can get capital amassed against big ideas versus smaller ones. It's just so it's going to be hard. It's going to be long. It's going to take a lot of effort, years, and so raise the bar.
Yeah. And do you think there is a I hate what I want to say there. Do you think there's a way that Seattleites look at that differently than other, not necessarily the Bay Area, but Bay Area or New York or LA or Dallas or San Antonio, whoever?
Yeah, the only data set I can really compare against is the Bay Area. Maybe it's self-selection too, because by the time companies are pitching at DFJ, they've been screened, and so I don't actually see all the detritus.
There's a few filters to get to that stage.
Yeah, sure. So I'm probably proportionally there's just as many crappy ideas in the Bay Area as there are in Seattle. But yeah, I would say that like you say, just I'd love to see companies more like the Redfins and Chefs and Remitlys of the world emerge out of Seattle, because those are the companies that are going to become these iconic 20 years from now they'll still be around, and they're going to create thousands of jobs, and it's going to drive the the tech community. I mean, this is why does Seattle exist as a tech community? We're fortunate that in 1983 Microsoft shows up, right? And then Amazon shows up in 95 or 96, and two companies basically. If they had moved to Denver, or where Denver would be the place.
Boise.
Right? Boise, yeah. Yeah. So I'm hopeful that from a Seattle standpoint that we can grow those large, enduring companies, and I think we have a few that are in the making. Tableau is definitely a company that I think has long legs to it. Expedia.
Yeah. And so the process of coming up with the larger ideas, it's the same process.
It is.
Like you say, whether it's big or small, it's still basically the same amount of work. Where do you think an entrepreneur needs the most help in the process? Where do you think that the whole comes first in the process? Like, say you got an idea on a napkin.
Yeah.
You start the process, right? And at the end of the process is, you have $500 million in sales or $1 billion in sales, and you're on your way. Where do you think is the place where the whole exists?
Yeah, the whole generally exists in this thing called go to market. That's this mysterious process of taking the technology you've built and putting it in the hands of a buyer who values the technology or whatever you created and is willing to pay you money. And how do you create that linkage from a marketing standpoint, the awareness building, the demand generation, through a sales process if it's a more complex sale? But that's the part that a lot of entrepreneurs fall down on. They can conceive of the problem and the solution, but they don't really understand how does and I'm speaking more for enterprise tech, which is kind of what I do, but how does a buyer come to know about a solution? How do they compare it against other alternatives? What's the process they use to evaluate and procure and bring it in? How would they deploy this technology? What sort of services might you have to wrap around the technology in order to create a solution for that customer? And that's So and I'd say that's where entrepreneurs have to go team up with somebody who understands that. Yeah.
Who gets it and done it?
Yeah.
And the idea of customer development, obviously we're talking about parts of that, right? So when you're in your day, right, when you were in the startup world, the customer development wasn't as, I guess, talked about. Like,
right.
We all talk about it now. It's like it's just a common thing, right? So
And fortunately, large companies, once again, are embracing young companies. They want to know what young companies are working on. They need to, bring in innovative solutions in order to compete with their peers. So, in the past, it would have been, incredibly hard to get to the head of IT for Boeing.
Sure.
If you're a local entrepreneur. But now, they're highly accessible.
They want to be talked to.
They want to be talked to. They want to know because they know that, their business is being impacted by software, and they need to understand what people are working on.
Yeah, that's actually a good just thought for everyone is no person's too big to talk to. Especially the younger people in a room. You guys have a card that you could play all the time. There's some people shaking their heads because I've talked to them probably and say, you know what, you have a card when you're young that you can play all the time because old guys will say yes, or old people will say yes to younger people much easier than they'll say to older people, meaning for a coffee meeting or whatever. Yeah, especially like in college. Never say no to a kid. You kidding me?
Yeah.
I mean, I played that card for years. So that's something to never forget. I actually worked with a guy who reached out to Wozniak before he was Wozniak and got a meeting, and he was on his board, for God's sakes. I mean, this guy was huge, right? But the guy just didn't care. He's like, I'm going to go talk to the guy. So I think that's a thing that we shouldn't take for granted, that whatever your idea is and whatever you're working on, go for it and talk to the biggest person you think you don't want to talk to that person, because you'd be surprised how many people say yes. It truly is amazing. And will do nothing but help you and be, Bill Bryant's Scott.
And it's amazing how many startups come through in their pitch, and they've got incredible logos right from the start. I mean, it's no longer the case that you got to work with Sisters of the Poor, at the start and kind of work your way up. I mean, they're coming out of the gate with a Boeing logo or Nordstrom or.
Yeah, that's something that's really done a good job with, and because there are lots of talented people, which helps, right? And they're willing to do that, because the guy who painted the wall for Facebook is now a multi-millionaire because he painted the wall on Facebook, right? Startups are sexy, right? Startups are sexy. So, in your going back again to your startup days, what do you miss?
What do I miss? Yeah, well, you
can say nothing.
No. I mean, I miss that sense of shared purpose that you get out of a company that you don't get from an investment firm. I mean, I take a lot of pride and pleasure from the individual companies that I'm involved with, but my partners can't really share that. They're not involved, and conversely, I don't. I hear about the successes, but I don't really feel it at any visceral level. So it's just really that sense of being deeply involved with a company, its culture, it's the how the team comes together, how decisions are being made. You just you're a bystander as a venture capitalist. You're not a direct participant.
And in your again, like you say, you're talking to these CEOs, somewhat almost weekly probably. What are you hearing from them that they're working on more than what thing do they spend more time working on, right? What is it the thing that they're trying to accomplish? And I'm talking about when they're building their company, because what I'm trying to get is what can we learn as a group that these guys are going through through you. You can say, here's some things that I hear fairly often, right? Or what are those things that you're hearing?
I'd say the best CEOs are spending upwards of 20-25% of their time cultivating and meeting talent. That's
recruiting.
Just best practice, just getting out, and it's not active recruiting, passive recruiting, just meeting people, but they are constantly networking and meeting people, because they know that 18 months from now, maybe they're talking to somebody aspirationally today. It's they're senior vice president of engineering at Expedia.
Sure.
There's no way they're going to hire them, but maybe 18 months from now they're at a stage where it does become relevant, right?
Yeah.
So that's what if you're not spending, and I know you say, well, where do I find the time? But if you're not spending, a good 20% of your time just focused on talent building in some way, shape, or form, and this is a form of that, coming to an event like this tonight.
Yeah,
Just
absolutely.
going out, checking
Shaking
in,
hands,
meeting,
yeah.
yep. So then, you're not doing your job as a CEO.
Yeah. And that goes truly any size, right? I mean, whether it's a 5-person company or a 50-person or a 500-person.
Yeah. I mean, maybe at some point it starts petering out,
sure.
right? Because you obviously get
Stop
a
being a
recruiting
startup.
function and all of that. But certainly under 100, you're spending a lot of time cultivating talent.
Yeah, 'cause, well, especially today, you're always looking for the, smart guys.
Yeah.
Smart women, smart people, smart humans, period.
Mm-hmm.
And in your, again, in your kind of daily routine of meeting with these CEOs, is there something that that you wish they were smarter on? Is there something that, again, I'm looking at it from their standpoint, saying, okay, what could we learn to know that maybe others are not up to speed on, and as a VC, or thinking, it'd be great if these guys are a little more up to speed on X, Y, Z, whatever that is. Is there any one thing that stands out?
Nothing comes to mind, Michael.
Yeah, that's fine.
Yeah.
You don't have to have an answer.
I thought I was supposed to have all the answers.
No,
Okay.
answers.
All right. No answer to that one then.
And again, for an entrepreneur standpoint, how do you tell people close to you, friends, partners, family, etc.? How do you communicate to those people when they tell you you're crazy, or you've gone too far, right? You just think they've gone over the edge, right? There's a point. There's a point sometimes where they actually do go over the edge, but how do you coach someone through that? If you're going to coach me through that, what would you tell me? Like, Michael, you should do X, Y, Z, or how do you help people through that process? And the reason I bring this up is because someone said it to me. So I'm just trying
recently
to get, I'm just trying to get a better
you're crazy.
answer. Yeah, exactly. So
Yeah.
they were saying, they're not telling me crazy, but
Yeah.
they were asking me this question, like, so I'm now at a point where people are starting to tell me I'm crazy. And they're like, so what do I do? I'm like, wow, well, I don't know, maybe you change people? I don't know, but what advice would you give me if I was saying that to you?
There's got to be a little craziness in all CEOs, and so that's not a bad thing. But I'm trying to decide whether I fall down on the camp of if everyone's telling you crazy and you're not listening, or should you be listening to that advice? And I would, we do a lot of team coaching, and just try, because ultimately, if the CEO can't bring their team along with them, then things are going to fall apart.
Sure.
So if there's a sort of really, truly crazy, radical idea that's brought forward by the CEO, and they're unable to convince their team of the merits of that idea, then it probably is a bad idea.
Yeah.
So.
What about when your family says, we think you're nuts? Why do keep going after this idea? Has there anyone in the audience had that issue ever, where they're like, yeah, see, I mean, there's probably people that don't want to raise their hand because they don't want to think I'm crazy, but right? I mean, you get to that point where your family starts to say, that's a tough call.
Yeah. Yeah, I'm
Were you
fortunately
were you ever there when you were in your career?
No, I've been married for 32 years now. My wife's just like, she knew that going into the marriage, that I told her that I'm not going to be working for
Boeing.
Yeah, for Boeing, right? So it's just the the ups and downs, and she's been good with that. She's never complained once, even when some deals took harder to get off the ground.
Sure.
Yeah.
Yeah. Well, audience, if you want to ask some questions, start putting those in your head, and I got one more here, and then I'll open some up. In your process of evaluating companies, I'm coming to you as a CEO, and I've got an idea to you, right? Mm-hmm. We're sitting down having coffee, talking about my idea. What are some things that you do not want to hear me say?
Like
we don't
classic
have any
one is,
competitors?
I was going to say, we don't have any competitors. It's like, okay, if you don't have any competitors, you aren't dealing with a market that anyone cares about, right? So, you always have competitors. You always have alternatives, substitutes, the way things are being done, at a minimum. And so no competitors is, crazy. Yeah. There are, every now and then you get these, sort of entrepreneurs who just fundamentally don't understand anything about, finance and ramps. I mean, they'll talk about, I did 200,000 last year, and next year I'm going to do 72 million. Right?
Exactly.
And it's like, okay, wow, how would you get there?
How would you do that?
How would you do that? And they say, well, you look at the market. We're just going to, we're going to get 4% of that market, right? So
We just want 1%.
yeah, so that's just a complete turnoff for sure.
Sure. Those are things that those are the good things that we need to understand as entrepreneurs. That, and one of the things that I always interested is like, we're never going to need any more money. This is plenty.
Yeah, and any proposition that starts with we're 2x better than the competition is probably that's a non-starter as well, because it's got to be a order of magnitude improvement in some factor, costs, performance. Yeah. Something's got to
be a 10x somewhere.
It's got to be a 10x. It's got to be.
Something's got to be a 10x.
Yeah.
That's someone. Actually, one of my mentors told me that way back. It's like if it's not 10x, then you shouldn't be doing it.
Yeah.
You should go somewhere else.
Right.
You can't do it 10x better than the next guy. Questions over here.
Tell us about your year in London and how that related to.
Okay, I spent a year in London from 2013 to 2014, and it was a bit of a boondoggle, the honest truth. It was a working sabbatical. Just stayed active with the companies I was involved with, but wasn't really there to cultivate new deal flow. So it was a fantastic year. If you ever get a chance to work abroad in a place like London, definitely go for it.
All the way back in the purple.
When you talk about, you just joked about going from 200,000 to 72 million. How do you really analyze whether or not a company has got a growth path that makes sense? Because sometimes it takes money to get sales, sometimes it takes sales to get money. And how do you look at a reasonable rank?
Yeah. Well, and this is going back to the topic of sort of understanding go-to-market processes and what's possible for a sales organization or a channel to deliver, and how long what's the sales cycle look like if you're starting from day one with no customers and it's a 6-month process to get sales, and you're showing that you've got a big ramp in sales in 3 months, well, that doesn't make sense, right? So it's just really tying the ramp to, it becomes somewhat, mechanized in the sense that, it becomes around sales productivity and sales quotas and quota management, and a lot of entrepreneurs just really fall down in that area. They just do not understand, how would I assign a sales? They'll say my sales reps have a $1.2 million quota, and you're selling a $10,000 piece of technology, and you go, wow, well, that's a lot of transactions, and it's like the first time they've done that math, and so.
At what point is a startup ready for VC capital? Would you say, or is there even a point?
Well, yeah. So venture capital is expensive money. Okay, and certainly as entrepreneurs, you want to make sure that if you're raising capital, comes at a time when you can, create a very large benefit to the company from taking that in. So you raise venture capital when you understand, if I take in hundreds of thousands to millions, if I do these things, I can dramatically increase the value of this business. And one of the things I will tell entrepreneurs when I meet with them, they'll say, well, I'm trying to raise 5 million, okay, just as an example. When you say 5 million, I translate that into 50 million, because I got to get a 10x return. So I'm saying to myself, the first calculation I'm making is, okay, based on this idea that what's your name?
My name is Brandon. My company's
Brandon,
Medio.
okay. Brandon's just given me this idea that he's working on. Do I think that my share of, after I negotiate with you over an investment, is going to be worth $50 million? So if let's say I own a fourth of the company for my $5 million, I'm implicitly saying I think the idea you've just outlined is worth 200 million, right? If I can't get there, then I don't give you the 5 million, right? Does that make sense? Because So you as an entrepreneur have to be very comfortable that, I raise 5 million, I can absolutely drive valuation for all of us to, a level that warrants you having raised the money in the first place.
Okay. So when you're ready to prove to investors that you can get that 10x, that's when you're ready. When you
Yeah.
Awesome. Thank you.
What does a healthy board look like, and what's your advice to the entrepreneur for building a successful board?
So the question is, what's a healthy board look like, and give me some ideas of creating that.
Well, a healthy board's got a couple of representatives of the founding team, the management teams, typically CEO, one other founder, one or two investor representatives, generally two, and an outside director. And that's kind of the, prototypical board.
Other questions, guys? Scott?
So I've worked with people that have an idea and they just share it with everybody. And I've worked with people that are so paranoid that they don't even want you to share the idea. And when do you work with getting them to put it out, and when do you NDA up and not NDA? I mean, you talked about how a lot of startups, the big guys, are out there looking for those ideas. And sometimes they're looking to steal the idea, and sometimes they're looking to work with you for the idea. So how do you build that? When do you NDA up and not NDA?
Yeah, well, I mean, any venture fund, well, they won't sign an NDA. I mean, as I said, we see 14,000 plans, most of which we don't even look at, really. So I'm not going to sign something that creates a legal obligation for a plan that I may or may not have even looked at. So it's not, it's not going to work to request an
Just building
NDA.
trust, having that trust. If you're going to go to VC, you've got to have trust that they're not going to.
Honestly, the idea we will sign NDAs for very narrow, sort of, I want to protect this specific piece of my patent application that's in process. We'll sign that, but you got to figure out how to share your idea if you're going to go sell to customers. And you don't ask customers to sign an NDA in order to try to pitch them. So
So, one question about NDAs. What do you say to yourself when a entrepreneur comes and says, "Will you sign an NDA?"
I
What's the
say
first thing that
I say
comes to
no. Well, I mean,
But
no, we
what,
won't.
But what's
No.
that tell you, though? Does it give you
They
a
haven't-
backstory about the
Yeah,
entrepreneur?
no, there's a naivete about the entrepreneur that they think that they have to be. You have to have a public version of what you're doing, or you're not going to get anywhere. I say, I've got the greatest idea in the world, but I can't tell you until you sign my NDA.
Yeah.
You're just, you're never going to get anybody, joining you. And
So, piece of advice, because literally this happens at least once every couple weeks.
yeah,
Don't ask me or anyone that talks to a lot of people to sign the NDA. it's just impossible because
Yeah.
I see too many deals and I can't do it. You see
Yeah.
way too many deals, you can't
Yeah.
do it. So that's
And we don't have control over the deals that,
Absolutely.
I mean, you might have met somebody and they end up competing with you. It's like, oh, well, I didn't, I
no
wasn't a
idea.
catalyst for that,
Yeah.
but, you're
So
suing me.
it's just
Yeah.
one of those things where it tells you the level of knowledge of where
Yeah.
you're at. So again, it's just a thing that just kind of gives you a hint of where that entrepreneur is in their maturity.
Now, we will sign NDAs after a first meeting, and when it's narrowly restricted to, they say, look, I want to share with you the secret sauce. Adam was out there. The patent's still being worked on. We really need to, protect this piece. And we'll say, okay, fine.
Yeah, we're gonna for that little thing.
Yeah.
Jackie, question?
Yeah, first of all, thank you for being here.
Thank you,
I
Jack.
have a macro and a micro question. So macro, Fortune.com wrote about Silicon Valley's $585 billion problem and the state of the unicorn. So I'm curious, since you invest in that place, I'm curious to hear kind of what you think about the kind of unicorn status for a lot of those. And then if I would eventually want to be a unicorn, what would I read or a podcast to listen to or some of your favorite things and how you stay in the know of what's going on in entrepreneurship?
Okay.
So the first one is
Yeah.
tell us kind of the state of the unicorn, which is definitely being talked about a lot.
Yeah.
As Jack said, in Fortune magazine as well as one of them.
Yeah.
And the other is just if I think I'm a unicorn, what should I be reading and what should I be listening to?
Yeah, so no question that over the last 24 months, the private markets have valued late-stage companies at a much higher level than the public markets do. We've got a case in point in Box. We love that company. By all measures, it's one of the fastest-growing SaaS companies ever. 300 plus million in revenue. I mean, it's a great company, and yet it's trading for about $2 billion today. Big number,
Sure.
but supposedly Dropbox has a 10 billion
Yeah,
number. Now, there is no way, if they had to go public,
they would get that.
they would get that anywhere close to that because their revenue numbers are, far south of Box, right? So there's no doubt that the private markets have been overvaluing the privates, and there's going to be pain for sure if those companies have to raise capital in the next 12 to 24 months in order to continue on. They are going to be challenged. They're not going to see the valuations. Certainly, if they went public, they wouldn't see that, and that's where we're at in the cycle.
Yeah.
So
talk-
it doesn't affect the early stage stuff really, and actually, none of my companies. I mean, I guess the blessing is that I don't have any, like unicorn companies,
Sure.
but we have, we've been raising money responsibly at valuations that are supported by the, revenues and growth rates. But if you have to raise money in the next 12 to 24 months, and you're a late-stage cash-burning company, it's going to be a real challenge, for sure. In terms of the stuff I read like the things that everyone else reads. I mean, it's the blogs.
You don't have a secret blog?
I don't have a secret blog.
Damn it.
Yeah, no.
No podcast, no. What about a book? Anything like in the last 12 months, like this is a great book.
A book.
It has pages.
Maybe
Yeah,
it's
right.
Maybe it's on your Kindle.
No, I was, I think the last book on the sort of investing in venture capital that I read was the Peter Thiel, what's it called? 0 to 1. Yeah,
Which is quite good.
yeah.
Yeah. One last question. One question. Mike Trump.
I'm interested in of all the landscapes you've seen. I've been lucky. I wanted to get your thoughts on the Seattle ecosystem and infrastructure relative to other. We're in a whatever 7-year boom cycle, but relative to other growing ecosystems. When you look at Seattle, and you think of these other smaller but more successful. What do you think is either missing from Seattle, or what do you like in Seattle that you think would be stronger to make the DNA better for you? Soil more fertile, or whatever metaphor you want to use. I've been fortunate to work with several small teams, one from Portland, one from Seattle, one from Pittsburgh at CMU, one in DC, and they're all now in either Austin or Silicon Valley.
Mm-hmm.
And the guys, for instance, the guys from Portland who did Techstars in 2012, Visify, would love to come back. They got hooked into Yahoo. But I meet guys from Portland who say the same thing. We'd love to know what's the secret sauce so we can get better retention. You see something in Seattle, not to make it too broad here, in either the ecosystem or the infrastructure that you think is either missing or you think really needs to get juiced to tackle one of the things you said earlier, which is, you know, not that I want to see Seattle get more obnoxious. I don't want that. But something seems to be, something could be more for.
Yeah.
So the question is, what in the ecosystem of Seattle can
Yeah.
we do, or does Bill think there is something missing that we could improve on or add to make the Seattle ecosystem better, faster, stronger? Right, Mike?
Yeah, look, long term, super bullish on Seattle. We're, as I said, we're not the Bay Area, but that's totally fine with me. And the high quality of life that we offer here is going to, over time, trump the Bay Area. Same for Portland, I'd say. But Portland's going to be a great community because people ultimately want to raise families and live in decent places. But in particular in Seattle, I think there are two things that are going on right now that are going to play to our strengths. So every single significant cloud infrastructure company, public cloud side is based here in Seattle, right? So you got AWS, you got Azure, you got the Google Compute Engine, you've got HP's cloud group is up here, Oracle's cloud group is up here. So, theoretically, all of the core technologies are being developed, and it's all going to come through Seattle. So the best thing for the Seattle startup community would be for Amazon to have a 30% hit to its stock price and stay there for 18 months to push out some of those engineers to get
Could start
going
their own
on
deals.
to basically rebuild technologies that were working well in Amazon for everyone else.
Yeah.
Okay, that's a time-honored strategy in startups. So to the extent that like we've got this lock on insight into scale out computing and that doesn't exist anywhere else, nowhere else. So I'm bullish about that. And VR is going to be big here. We've got HTC Vive, we've got the Oculus group here, and hundreds of startups. It's between us and LA. LA brings the cinematic experience in video, but we've got all the gaming stuff up here. So I'd say those two areas, you got to be long on Seattle for those two reasons.
I would agree.
But what we don't have is we don't have any kind of social thing going on. Like the Facebooks and LinkedIn,
social
and
network.
social.
Yeah.
So we really needed something big in that area. We just didn't. We missed that wave.
Yeah, just missed it altogether.
Yeah.
Well, I have to thank everyone for being here, for you guys being here, because it would be kind of boring if it was just Bill and I. No offense. But, so thank you all for being here, taking some time this evening and showing up. Like
In the future, in virtual reality, we will be just sitting here, and
exactly.
then there will just be a bunch of avatars out here.
yeah.
We'll have a headset on, and and everyone will be at home listening
really,
in.
in front of their fireplace, right?
Yeah.
Again, thank you all for coming. Thank you to all of our sponsors, CIP, PwC, Drizzly, you guys are awesome. Of course, Galvanize for being here, and Pivotal Labs for helping us do our thing. And next month we're here, same time, same bat channel with Nick Soman from now Rhapsody, Reveal, Lightbright. And if you need anything, shoot me an email if I can be of any help. Be safe, have a great week, and see you next month. Oh, one thing, can't forget. Without Jack Smith, this thing would not happen. Jack, thank you very much for all your work. So, have a great month, everyone, and be safe. Thank you.
Thank you.